Stop chasing. Look, it's Marcel, aka Honey Bunny Sunny, and I'm on a mission to make you some money. Listen, today we got another banger video. I'm trying to tell you, if you can implement this, your trading life is going to go crazy, right? Again, my videos are proven, tried and true, and I always say, you go and test it out for yourself. You go back test to make sure that what I'm saying can be proven, okay? Now, I would recommend you do it in paper trading if you're a new trader, but if you already have kind of gotten warmed up and you've been taking real trades, you can implement this immediately to start making money, okay? Now, this is a swing strategy that I think is going to just, like I said, just blow your mind, right? So just We'll get to it in a second, but if you're new, welcome. I appreciate everybody. Like y'all see, the momentum is building. We're growing. So do me a favor and hit that subscribe button, right? I'm giving you guys, I'm pouring into you. I want to see y'all win. That's what this is about, right? So hit the subscribe button so that you're not missing anything. And if you continue to follow, you continue to engage, you're going to notice that there's a journey that we're going on. All right. So rock with me. All right. So this particular strategy is called the 25K strategy, right? And it's from this book right here, okay? If you get a chance, read into the book because the strategy is dynamic. I'm only going to talk about one portion of the strategy, which can be used completely by itself. You're not missing anything. But when you get real good at options trading and you want to start, going beyond doubles and you want to start adding in different mechanisms to the strategy, this book is going to show you exactly how to do that. All right. So I'm just going to focus on one particular aspect of the strategy that you can try alone. It's very simple, very to the point. You can thank me later. All right. So I'm going to pull up some examples and just kind of like walk you through like what it is. Right. So I got Palantir pulled up right here. Okay. I need you to make sure that you got your notepad, you got whatever it is that you need right next to you to make sure that you're getting this into your nugget, into your noggin, into your brain, right? Into your dome piece, right? When you start to implement this in your swing trading, you are going to be like, wow, it's been sitting there the whole time. You mean to tell me there have been people out here making money using this strategy the whole time? Right? I've charged people for this, right? I'm giving it to you for free, right? Because I want to see y'all win. Now, the strategy is a strategy that allows you to catch a move before it happens, right? We still going to approach all of our trades with the same approach that we approach everything, right? Which is confluence, having confirmation, having multiple things showing us that this is going in a particular direction. All right, so as you can see right here on Palantir, I have two specific indicators. I have the Bollinger Band, right, BB. Y'all go look up Bollinger Band in the indicators tab right here in TradingView. And then KC, which is Keltner channels, right? These are both indicators that track, volume and volatility, okay? Now, when they are put together, they tell a story that is blatantly obvious, right? Now, the way that stocks typically move, unless the stock is transitioning into a different market, is a wave-like pattern, right? A wave-like pattern that's going in a trend. So a wave-like pattern going up or a wave-like pattern going down, and then occasionally you will get things that interrupt that wave-like pattern. And that interruption is typically changing the direction or faking like it wants to change the direction. That's the only way the stocks can move, right? So we got the wave up, wave down, consolidation, or a change of direction, or a fake out, and then a continued wave up. That's the only way stocks can move. You can look at any chart pattern. It don't get more complicated than that. So keep that in your mind, okay? Now, with this, we have the Bollinger Bands and the Keltner channels at the same time. Mind you, we're looking at this on a daily time frame, right? It can work on other time frames, but it's the most potent on a daily. So we focusing on a daily time frame. What you want to see is the Keltner channels, which is this yellow indicator right here and right here. This is the top band, this is the lower band. inside of the Bollinger Bands. It's inside the Bollinger Bands. It's inside the Bollinger Bands, right? This is the outside. This is the bottom of the Bollinger Band. Red is the top. So these Keltner channels are inside the Bollinger Bands. You also want to see volatility. So like a pretty nice distance, because you're getting into a trade that essentially is going to be reverting, right? So this is what we call like a mean reversion. It's reverting back to the mean, reverting back to the center of these particular indicators. So as you can see here, this is the perfect setup, and it's the reason that Palantir was down today, but you'll see Palantir come down even more over the next, month, which we'll get into in a second. It's inside the Bollinger Band, the Keltner channel. It's rejecting off of it, and it's going to come down to at least the mean, which is right here at 166. It's currently sitting at 178. Now, you don't really need more than like a $5 to $7 move for your money to double when you swing this out for 30 days, right? So what we're looking for is to take a trade in the opposite direction that the stock is sitting at the tip of the Bollinger Band or Keltner channel, right? We want to see a rejection or a bounce off of the Keltner channel and Bollinger Band, but we want the Keltner channel to be slightly inside of the Bollinger Band, right? We are going to enter swings that are either calls, right? If it's down here, we're entering calls for it to come up to the middle, or if it's up here, we're entering puts for it to come down to the middle. Very simple, right? It's a mean reversion, right? It's coming back to equilibrium. It went off and it did some things that were unprecedented, and it's like, all right, let me come back to size. Let me get back in my lane. Let me stay in my lane is what it's ultimately saying. And then it's there that other decisions are made, like, hey, are we going to continue down, or are we going to start finding new ways to go up further? And this stuff happens in like 2-week cycles, right? This is why sometimes you can get a contract that's out for an expiration for the week, and it's going to happen, but it just don't happen in the time that you want it, and then you find yourself down way more than you need to. With this particular swing, we're getting it out for 30 days, and we know that the cycle is starting because it is rejecting of the Bollinger Band and the Keltner channel. All right, very important information. All right, I'm not, you gonna go and implement this, and you can be like, God damn, that shit worked. It's gonna make your life, okay? Make sure that this is inside the Bollinger Band, the yellow, the Keltner channel, inside the Bollinger Band. You want space. Again, we follow the same rules that we follow in trading. If something is consolidating in a range, like in this area right here, let's move this over. Like, you see how tight this is? We not taking these trades. We wouldn't, even if the Keltner channel is inside the Bollinger Band here, we're not taking it because it's too tight. We want to see volatility, right? You see how this was up here? Where was this at? Up here at the Bollinger Band. The Keltner channel was inside of it. What did it do? It fell all the way down. It's proven. Right now, it's the same thing. We got a red day yesterday. It rejected off the Keltner channel, and then today it fell, and it's going to fall some more until it comes to the mean reversion. Depending on how we end September, it could possibly come down even further, maybe to like 161, which is the next demand area. All right, I need y'all to lock into this information. I'm hoping that this is making sense to you. Okay, so we're getting into 30-day swings in the direction, right? The opposite direction of where it's rejecting or bouncing from. If it's at the top of the Bollinger Band, puts. If it's at the bottom, calls, right? Now, let's give this a little bit of context. If we are in, a bear or bull market, the higher probability is going to be in taking something that is going in the same direction, right? So if we're currently in a bull market, then a bounce down here at the bottom of the Bollinger Band would be higher probability than taking a counter trend trade, even though it's up here. Now, this is probably still going to work out. I'm just giving you where the higher probability is going to be. All right. I'm telling you, this is stuff they're not giving you for free on YouTube, right? Implement it. Hit the questions. Hit the comments with questions. I'm going to cut this off right here. Again, that's just one aspect of the strategy that you can use alone, right? Regular naked puts, regular naked calls, long calls, short put. Like, you don't have to do anything. It's not a covered call strategy, all of that. Now, there is a layer of that to this particular strategy, but you don't need that to get started. All right. Remember, you're getting into these swings for 30 days out. 30-day expiration from the time that you were entering, and the time that you were entering is when you see it here on the chart, right? Well, I cut the video off, so you probably can't even see it now, but it's when you see it on the chart at, like I said, at either the top of the Bollinger Band or the bottom. All right. I hope this video was helpful. Again, get inside those comments and ask the questions. If you're not clear, I'm going to get you right. All right. Listen, invest smart, live free. I'll see you on the next one. Peace.